Hey, this is Mike Durr, Kingwood Mortgage Guy, and I am here with Better Credit, Better Homes. Normally, I've got my partner Joe Salas with me, but he probably is running a little bit late. I know he's going to a training, so I just wanted to welcome you guys here, and we've got a full agenda to go through. I'm going to go ahead and start. Hopefully, Joe will pop in when he is able. So one of the things I'm going to do is I'm going to add this to the stream. And let's see if this is, how about I do it like this? No, I think I'm going to do it like that. All right, so better home, or better credit, better home. That's what we're talking about today. And really what this is going to be a news and update. I'm going to talk about some housing humor. I thought it was kind of funny. You may not. It's kind of sad, actually. We're going to talk about raising your credit score. I always like to talk about that, why it's important. We're talking about a little bit about the housing supply. We'll talk about buying homes from family members. That's kind of a thing. Oh, look who just added here, just got here. There he is. I was getting started without you. You're just a few minutes late, but I was hoping you'd come.
It's all good, man. Sorry, my wife's been sick, so it's been a little hectic today. I had to get kids and feed them and all that sort of stuff. But go ahead, man. I'm sorry to interrupt.
That's all right. I'm just going over what we're going to cover today. We're going to talk about the housing supply. We're going to talk about buying homes from family members. Now, that's become quite a thing. And not only buying homes from family members, but buying home from your landlord. Joe, you're not going to like that, but I'm going to have to share it with you anyway. It's a big part of what we're doing right now. Is there going to be a housing bubble? Well, we will opinionate on that. We can't tell the future, but we definitely have opinions. Then the national rates for 30-year mortgages, I'll just give you a quick update. Things have changed really later this afternoon. And then I want to share with you a lock and shop program that our company is offering. So, Joe, talk to me. Tell me what's been going on this last week.
Well, my wife and I went to LA.
Nice.
I have a couple of clients that have been calling me from over there. So I wanted to, my wife is now in real estate. So we went last year, but I was the only one in real estate at that time. We went over there and met some clients in person, and then also spoke with some other agents in the area that are high producers that may be able to help with referrals, etc. Other than that, once we got back, my wife got a little ill and she's recovering. But as far as real estate's concerned, working through some deals, sent a gentleman over to you to, that's one of the things that we've been talking about is better credit, better homes. And he was interested in finding out where he stood in the credit situation. And you're actively, I think, helping them out, right?
That's great. Well, we've talked, and then we've kind of stumbled a little bit as far as getting together, but we definitely are on target to get together. All right, so I'm gonna just go here. I saw this, and it may not be funny to anybody but me. I just thought it was kind of funny. It's a little cartoon that says, "Oh, if you want something more expensive, I can show you this again tomorrow." And that's kind of sad, but what I wanted to do is I wanted to include a little levity into the program, and we'll probably have something, either Joe or I will come up with something that will hopefully make you smile. It may not, it may make you cry. And this one probably is on the crying side. The second thing we're going to talk about is credit. And here's what I've got to say about credit today. Is notice this thing right here in the middle that says credit score 999. And the point of this slide is that you probably heard of the Experian Boost, and you may have heard of Credit Karma, and Equifax probably has one, and TransUnion has one, and Credit Club, Money Saving Expert. All of those things are what we call, and we laugh about them, as consumer credit bureaus. And the problem with them is they don't relate to anything that a mortgage company looks at. So if you're looking at a Credit Karma or whatever Experian Boost or something to that effect, the score that they're going to have, they have a bigger scale than we do, and it tends to make the scores look like they're higher than they really are. And the only one that I found that I really trust is this guy right here, the myfico.com. And I actually learned that from one of my customers. And I was was suspect. I mean, I'd seen so many of them that I just kind of poo-pooed them. The MyFICO is right on. It's maybe a little more expensive, but it works. It's better. And so just for anybody out there, if you're trying to make your credit better, don't go to Credit Karma, don't go to Experian Boost, or really stay away from the Experian Boost. And I'll go into that a different thing, but I totally am against what Experian Boost does. It's just, it doesn't help you with a mortgage. It may help you with something, but it doesn't help you with mortgage. The myfico.com is absolutely the one to go to. I don't get anything from them for saying that. It's just the right one. So that's all I have to say about that. Joe, you have any input on that?
I have never heard of myfico.com, so I wrote that down as you were mentioning it. I think that's pretty interesting. Who hasn't heard of, Credit Karma and their, cheesy little commercials but they're in the business to make money either by partnering up with credit card providers or loan providers and getting those referral leads. They're not necessarily in the business of providing you the exact score for what you need when you need it. So that MyFICO, you better believe I'm going to be researching that as soon as we get offline here.
Let me give you a quick story on that. There's a lot of times that we do what's called a credit rescore. That's when somebody comes to us with a credit score. The credit score is going to hold them back in some form or fashion, so we try to increase their credit scores. It's not hard to do. It's not rocket science or anything like that, but this particular app allows us to get the same information that we'd get with a credit rescore, and I mean, it's right on the target, and it's also substantially less expensive, than getting a credit rescore, and it works just the same. So I'm a big fan of it. I saved a guy, I mean, I bet it was a 0.5 point in interest rate based on using this thing. So I am a huge advocate of it and have become that. So that's the little bit that we'll add just for the credit scoring and getting your credit better. So I saw this this picture here, and this is a true story. This is the line of people. A house comes on the market, and when they saw how many people were interested in seeing the house, they gave the potential buyers 10 minutes to go in and view the house. But there was a line of 30 people in line to see the home. And my comment is, are you kidding me? I mean, is this getting worse? Like last week, we thought we were reporting on something that it may have been letting up a little bit. According to the news this week, it doesn't look like it's letting up at all.
Just got into a deal at list price. So, I think that sellers are a little bit more, how would I say, not fearful, but aware of the potential situation out there. So if they have a good buyer on the line and the terms are beneficial to both parties, obviously I'm representing the buyer side, then they're going to snag the deal that makes the most sense. But as far as lessening, no, I'm dealing with these California buyers, and we're up against multiple offer situations every house that they want me to put an offer in on. So,
yeah. I was shocked at when I saw this, but it is real. All right, so this part is going to be painful for Joe, but this is home buying from family members. And I've got at least 3 deals going right now because of this. And the reason that you would buy from family members is because you don't have to wait in that line. I mean, that whole competition for winning the house goes away. And it may be a house that you grew up in. It may be a house that you're living with your family now. That's the case we're dealing with right now, is that we've got a couple people that have been, I guess they were out of the house and then they came back to stay with their parents. And now the parents are getting the heck out. And that usually has a way of working itself out. Somebody's going to leave. The parents and the kids are not going to stay together. And it just, who's going to go out and face the crazy world that we're in out there. But I just want to let you know that there's some detailed stuff that you need to know when you do this. There's pros and there's cons to doing this. And I just wanted to raise my hand and say, I do these all the time. I'd love to help you. And I think it's a very good market and it's a good strategy in a way to win in this crazy environment. So on that next step is there a bubble? And basically, this is the same thing we're going to talk about until we're tired of talking about it.
Until it pops, or we just decide it's
Yeah,
not going to happen.
that's right. I just put a different bubble up there than I had last week. And I'm convinced with the number of people that are still out there wanting a house, I don't see a bubble personally, or at least not in our near future. Do I see a recession? I do. But a bubble, I'm not seeing it. Joe?
It's still one of those things where I don't want to say either way. I can say, though, that either way, I'm prepared to help buyers and sellers in the market as it exists at the time that they want to either buy a house or sell a house.
You're such a coward. Coward.
I don't want to say either way. There's a camp that says, yes, it's coming. There's a camp that says, no, it's not. And I'm right here in the middle looking at both of them going, okay, just let me know what I'm supposed to do when I'm supposed to do it. Because at one point in time, it's now a seller's market, and it will transition. Just what goes up comes down. The ebb and flow of real estate. We've been seeing a trend upwards for years now, and that's what people are looking at, is the average time between these drops that happen, and we're stretching the limit on that time limit. So there is the statistical, kind of people out there that are saying it's coming. They can't say when, but they say it's coming. Now, I don't agree either way. I'm more of if it needs to be done, I'm going to do it for you. And no matter what market it is, a seller's market or a buyer's market, I'm going to be there for both my buyers and sellers to help them get the best deal and the best terms that I can possibly get for them.
Gotcha. Well, this is my cut, just briefly, is the interest rates are a problem, and they're a problem for the less expensive houses. But when you say less expensive, I mean, what does that even mean today? Sandy had a listing for a property that was, I think they listed it, it was actually what's the term, perfect mobile home, or a perfected mobile home, I think is what it is. And all that means is that a mobile home was put on a plot of land and it was secured. And so that they're not, lenders are afraid you're going to hook up a trailer hitch to them and drive them off. Well, this is perfected, means that they're not going to do that. They're not.
Right, it's made one and the same as the parcel of land.
I went out with her to help her put the sign up, and it turned out that, I looked at the house, you couldn't even tell it was ever a mobile home. And the whole community was like that. It was priced at $147,000. And I mentioned it to her myself. I said, Sandy, we should buy that. And she said, yeah, but it's a little too far out. Anyway, whatever she said, it didn't matter. That house had about 30 different offers on it, and none of them were below 147. And I mean, it's just that type of market. And there's so many of those people. It used to be anything under $200,000 represented a first-time home buyer deal. And today it still does. But I think it's being stretched a little bit just because of the price of homes and the fact that the the rates are continuing to go up. It's eliminating a lot of people from home buying right now. They may have the income, they may not have the money. And for sure, as their debt ratio is expanded, they're just going to run out of room. So it's going to be interesting. I think the appreciation is going to stay there for a longer time. And unless something else crazy happens, I don't see a bubble happening.
Mike, on that note, I don't think we've talked about this before, but it would be good information for first-time home buyers. Do you offer down payment assistance?
That's a good question. I used to not do it. I wouldn't do it, and let me tell you why. I didn't think it was a worthy thing to do, and here's why. To get into a first-time home buyer deal, it's 3.5%. If you can't scrape up 3.5%, or borrow the money from your parents, or get the gift for their parents, the problem is the way they do their first-time home buyer programs is they use the FHA platform, and they raise the rates on the FHA to cover the premium that they pass on to the borrowers. And what you're doing is you're putting people that don't have any money in a worse loan product than they would get if they could come up with that 3.5%. And I may be wrong. And so I've actually got a program now that we are starting to offer to first-time home buyers where there's 0% down. At this point, I haven't done one just because I probably told everybody that I didn't do them because I didn't like them. Because of the aggressive appreciation on houses, you can actually win on a deal like that, assuming you can win the bid. So it's a mixed answer, and I've evolved.
Yeah. As a note to everybody that's watching, the first-time home buyers and people that want to take advantage of that, I say this to my son and anybody else that will listen: nothing is ever for free. So you may be getting that assistance on the front end, but you pay most likely a higher interest rate or more over time than that money that you get on.
Absolutely, yeah. You're paying a higher mortgage payment, which is going to affect your debt ratio. And it's just going to make it harder for you to sustain and to win in real estate. And winning in real estate, let me tell you, I'm a huge fan of buying real estate as it being one of the most, it's the most important thing you can do to ever be financially sound. Because you're not only, I mean, you're going to be paying rent somewhere in most cases. And when you're paying that rent, somebody's benefiting from that. Well, it might as well be you. And you just have to be careful when you pick out the house. You get somebody like Joe or Sandy or somebody from Byrd Properties, and you get them to kind of guide you as the selection of the house that you buy, and you're going to win. I mean, and when we say win, I mean that the property is going to appreciate as long as you stay there, you improve it, you keep it painted, you take care of it, you do all those things. And real estate has proven over history that it's a great investment, and it's never been a better investment than today. I mean, this is probably as good a time as it's ever been. So, yeah. So the answer is that, yeah, we're doing them, but I'm explaining to them, the first-time home buyers, who I love to work with, by the way. And really, the origination of this program is designed to speak to first-time home buyers. That's not to say that we don't talk about stuff that people that have bought 15 homes don't want to hear, but we're really focused on, or at least I'm focused on, making sure that the first-time home buyers get it. They know the right questions to ask and go. So here is a mortgage rate history. I think I put it to you in a different way, and I know it's not big enough to really see, but over here, this is 2, and this is 4, and this is 5. I think that's right. 2, 4, 6, I think is what it is. And these are interest rates. This is 1971, this right here on this chart. And this is over here, 2022. All right. This is that 1980s period when I bought my second house. I probably was right at the top. I don't know. Whatever time it was, I was paying 12.9% on an adjustable rate that adjusted every 2 years. Now, the good news, I probably caught it on the down thing, and we never really paid more than 12.9%. But even at that time, it made sense to buy a house. And we did it. But look at where we are. When people say that rates are crazy high, well, you got to keep that in perspective of where they've been, right? Most of this chart is above that. So
I love this. I'm going to ask you for it after we get off the line.
Yeah, no, it's a great chart. Anybody that's in business should see this because it gives you perspective on what's going on. Now, keep in mind, we were here. I mean, this was the sweet spot right in here, but it's just right there. So anyway, I think that's a good chart. And so for anybody that is looking for that perspective, I think that'll help you. So I got this, and I always listen for these. This is today a lock-float considerations. And it was an interesting day because the market changed at the end of the day. It started out pretty good. But this is what the guy wrote. He said, "The hatches are battened down, and we've been weathering a storm of rising rates all year, but especially since March. There have been and may continue to be moments of reprieve that hint at broader recovery, but we will continue to treat those as false starts until we see something that lasts more than a few days, preferably covering much more ground than previous attempts. Until that happens, there's no great case to be made for floating except among those hoping to get lucky." So, and the dog is a double entendre because I had a dog that was a basset hound that was named Lucky, and that's why I put him on there. That's not actually him. So here's the deal: when we look each day, that we have an option to lock a loan or to float. And so the float means that you are going to hang with the market, anticipating that the interest rates may go down. And I can tell you that I haven't even considered floating for a minute on any loan since probably February, just because the rates are going up so fast that you just don't have any time to wait. And you'll lose money. That money will just drift away from you. You'll be paying more for each house if anybody tells you to float right now. And if somebody tells you that, I'm going to encourage you to run or maybe get in a race car and drive away from whatever's telling you that right now. Okay. Joe, you seen any of that? Have you ever messed with any of the float or lock things? Probably don't.
No.
Okay. Well, that's just my wisdom. There may be somebody a lot smarter than me. I just haven't seen anybody that won by floating in the last 3 months. All right. The last thing I've got to talk about is, on that same note, we've got a program that is what's called Lock, Shop, and Go. What this does, this allows you, after you get pre-qualified, you can lock in the rate for that day, and for up to 90 days, you can shop. And that means that you are saving. Think about that. If you had done that in March and your rate would have been 3.99 or something to that effect, and you could have looked for houses, you could have gone into multiple bidding wars, you could have lost them all, and at least had the chance to get that rate on the 30-year mortgage. So Lock, Shop, and Go, if you don't know about it, you do now. It's a great program. You do have to kind of give all your documents in. You got to be kind of locked in to doing the loan with us, but it's a great program. Now, here's the other thing. What if you lock shopped, and we have somebody that locked at 5 1/4, and they just started shopping just this last week. And he said, well, my rates are starting to stabilize. What if they go down? Well, you're not stuck to that 5 1/4 rate. If rates go down, you can lock, because we're brokers, you can lock at another lender that has a 4.99 or 4.75. So there's no downside to this program. And I encourage anybody that's out there thinking about looking at properties, the lock and shop thing is a win. I mean, there's no way it's not a win. So anyway, that's the last thing I was going to say about my programs. Joe, tell me about what's going on in the inspection world.
Inspections, same old thing, different day. This year they came out with a new TREC. TREC came out with a new report form, and a little bit of changes in the SOP. So just working through those changes and familiarizing myself with them. A couple of the changes, we didn't used to have to identify the drain material for plumbing fixtures. We do now. Another change that is new is that we didn't used to have to identify the gas distribution piping. We do now. And also the gas meter, we have to state the location. So those are a couple of the new changes. I've been not as busy on the inspection side as I have been on the real estate sales side. As we talked about, Mike, I also do the training for my brokerage.
Right.
So I've been busy with new agents. We've had a lot of new agents join Byrd Properties International lately. So I've been helping onboarding them and training them in the world of real estate, making sure that I can be a resource for their success. I love doing that. So I've kind of pulled back to a certain extent from inspections, but I still do them as they come up. Mostly I've been doing what I call code inspections for people that are building homes or building structures attached to their homes, where I go out during different phases of construction and look at what the contractor has done, identify issues with the structure or the installation as it's been installed, and alert the homeowner to, or future homeowner to, those issues, so that the contractor can make corrections. One of the things that I tell my clients all the time is that if you're dealing with an electrician or a plumber or an HVAC professional, all of those have to have licensing in the state of Texas. There has to be a master who is licensed for that company. For a contractor in the state of Texas, there is no licensure required. So if somebody's building a fence, um, building a covered patio inside your house, changing structure of the house, walls adding, walls deleting, there is no licensure required. Now, hopefully they are contracting out licensed plumbers, electricians, HVAC specialists, etc. But that's what I get paid for, is to go through these structures and these construction projects and identify the fact that the contractor and in a certain sense their contractors aren't doing the minimum standard, which when you talk about code, it's the minimum standard of construction or installation of these systems that are included in a residential structure. That's been my bread and butter over the last 8 years of doing this, is that I started with engineers, I started with builders, and I would go out on behest of the engineer to these construction sites and identify engineering issues, and then also to plan, and then also code deficiencies as they were installed or constructed. So I've been doing a lot of those lately, not so many TREC inspections, but definitely staying busy with real estate in general. And I love doing what I do. So if anybody out there is watching this and needs help, either in the inspection world or real estate sales side, let me know.
Well, it occurred to me as you were talking that one of the things that you and I are all about is protecting people, our clients, from what can happen. And the what ends up happening when you have the potential to lose in a real estate deal is when the property, for some reason, is some kind of defect. There's it could be the foundation, it could be the electrical, it could be the air conditioning, it could be any one of those things that causes a real trauma to somebody in this business. And to those first-time home buyers, this is that insurance is dealing with somebody like Joe that will inspect the property and protect you from buying a house that is unworthy. And I think that's so important, and it's such an important message to get out there that, oh yeah, it's $400 to $500, something like that. Well, it's the best $400 or $500 that you'll ever spend. And I just encourage everybody to reach out to Joe or somebody like Joe, but preferably Joe, so that when you're buying a house that you do that. Don't.
I'm going to put an asterisk on that statement, is that I do not make any expressed or implied warranties or guarantees, and I'm only inspecting the property at the time of the inspection. So there are things that can happen after I leave that materially affect the property. But my job, both in inspections and in real estate sales, and I say this even to the trainees that come in, it is fiduciary, right? We work to protect our clients, and we provide them with as much information as we have to allow them to make their own decisions. And I can go out, and not so much on the code side and as things are constructed, because that's the minimum standard and it's a state law that things need to be constructed to that. But on pre-owned homes, when I go out there, my job as an inspector is not to tell my client to buy the house or not buy the house. My job is to give them a report as best as I can, to the best ability that I can perform, to allow them to understand the general condition of the house at the time of purchase. And as I'm approaching a deal on the sales side, I tell my clients the same thing. The purpose of the option period and the purpose of inspections is to be as informed as possible to make those decisions. It's not to, yes, we are going to approach the seller and ask for concessions, negotiations, corrections, discounts or contributions, but really with an as-is offer, which most of the offers are presented as a contract offer to a seller. An as-is offer means that the seller doesn't really have to perform, because we are producing those requests via an amendment. The initial contract has been signed and executed. In order to get those concessions, we have to present those as an amendment, a signed amendment by the buyer, but the seller would receive that amendment and can decide whether or not they want to proceed. And at that point in time, I can tell you right now, great picture. I can tell you right now that there are clients that I've had both on the inspection side and also on the sales side that take that report, and now they have the knowledge. Now they understand what the total cost of the house is. It's not just the sales price. It becomes the sales price plus the corrections that they're going to have to proceed with or do after the purchase of the home. And the home is still worth it to them on the front side, now knowing what they know. And that's my job as an inspector. And it's also my job to inform my clients on the sales side that this inspection and this opportunity that you have to do your due diligence is an information gathering session. It doesn't guarantee anything. Even if I issue my report today, it doesn't guarantee that something else might not come up in the future. Right?
Gotcha. All right. Well, good deal. I wanted to make sure that information's out there. I feel strongly about what the craft is that you do with that. And anyway, so thanks for showing up. Appreciate it. I was a little nervous about doing the whole
thing. Made it by the skin of my teeth for sure. I saw the clock and I was like, oh God, I got to log in. It's been a crazy day or 2 days now since we've been back. Wife is on the mend. She has some meds now, so everything should be back up to speed for next Tuesday. I appreciate you hosting this, Mike, as always, and I look forward to doing it in the future. I'm going to send you an email with a couple of requests. One of them is for that interest rate chart after we get offline.
You got it. All right. Good to talk to you, man.
All right, my man. We'll see you next week.
Bye, guys.